Morning, guys. It's Tuesday, May 27th, 5:26 a.m. Central Time. Grain markets are mixed this morning. July corn futures down 2 1/4 at 457 1/4. July soybeans up 3 1/4 at 1063 1/2. July Chicago wheat down 8 3/4 at 533 3/4. July Kansas City wheat down 9 3/4 at 529. July spring wheat down 4 3/4 at 601 3/4. We've got some tariff back and forth. Let's start there.
So, following a phone call with EU Commission President Ursula von der Leyen, President Trump agreed to extend the deadline for imposing a 50% tariff on EU goods until July 9th. The tariff threat stems from Trump's reciprocal tariff policy introduced in April, which initially proposed a 20% rate on EU goods. However, on Friday, Trump escalated the threat to 50%, citing frustration with slow moving negotiations and what he views as unfair treatment of U.S. companies by the EU. Economists warn that the 50% tariff could impact $321 billion in trade, reduce U.S. GDP by 0.6%, and raise consumer prices. Also, last week, Trump announced plans to impose a 25% tariff on smartphones manufactured outside of the U.S. by companies like Apple and Samsung.
So we're back to this tariff chatter, moving the markets around. It feels like we went a little while without that sort of thing, and now we're back to this. So Friday, when Trump initially announced this tariff hike, turned into kind of a risk-off day in a lot of markets. You saw the stock market down. I think you saw the grains back off partially because of this. And now today, following Trump's comments on Sunday or following this phone call, you've got kind of a risk-on day. The stock market's up 1.5%. Not really much going on in the grain markets. I wanted to take a look with you guys at a commodity index chart. This is the Bloomberg Commodity Index. And what exactly has the tariff war done to the commodity markets? Really not much. We've generally speaking, we've consolidated for months and months and months, really dating back to like the first part of 2023. There just hasn't been any big move up or down in the commodity markets as a whole. This Bloomberg Commodity Index, it tracks a basket of commodities. It's 30% energies, 23% grains, 15% industrial metals, 19% precious metals, 7% softs, 5% livestock. So it's a good gauge of what's happening in commodities as a whole. And it's really done a whole lot of nothing. If you look at that second to last bar on the right there, that's the month of April. And we had kind of a big down move. Then we kind of recovered. And now we're right back into this trading range. So despite all of the tariff headlines and the back and forth, it just doesn't seem like commodities as a whole have really been affected in any real material fashion, which is interesting considering that we talk about this so much and we lead off a lot of our stuff with this, but it's just like it affects the intraday price action. But in terms of the trend, you don't really have much of a trend here in commodity markets as a whole.
Weekend rains favored the U.S. plains and mid-south. The best amounts and coverage were seen in parts of Nebraska, Kansas, Oklahoma, Texas, southwest Missouri, Arkansas, and the Gulf Coast. The vast majority of the U.S. Corn Belt was dry. Scattered rain sit over portions of South Dakota, Minnesota, Nebraska, and Iowa early this morning. A separate system is moving east through Kentucky. There is some divergence in the weather models this morning. The Euro is mostly dry for the Corn Belt during the next 5 days, while the GFS offers some Corn Belt rainfall.
Let's go back to weekend rainfall. You see a lot of rain over HRW wheat country in Kansas, Oklahoma, Texas, places like that. I ventured to say that that's probably part of the reason that wheat futures are lower and really independently lower this morning. Looking at the forecast, there is some big time divergence between the Euro and the GFS. If you guys are watching, this is just the next 5 days. The Euro's on the left, and you've got mostly dry conditions for the Corn Belt. Some of the, call them southeast portions of the Corn Belt, like your places like Kentucky and Tennessee, they're going to see some rain. But the vast majority of the Corn Belt is supposed to be dry, according to the Euro, over the next 5 days. The GFS on the right looks a lot different. You've got some central Corn Belt rain, some stuff in Illinois, Iowa, parts of Missouri. You go out through the 10-day period, and it's still a little bit different. The GFS is still favoring these rains in the central Corn Belt, where the Euro is not. Both models looking for some rain in the western Corn Belt, which is probably your big problem area in terms of dryness, but there's absolutely some divergence here. I've got two maps from our friends at Crop Profit, and they look very, very different. This first map is based on Euro model data, and this is rainfall, expected rainfall over the next 14 days. So based on Euro model data, our friends at Crop Profit would estimate that U.S. corn country will see 99% of its normal rainfall. So very close to normal. But you can see there's a band that goes up here through the central corn belt, through Missouri and Illinois and Indiana. That'll be drier than normal. And then you go to the west, you go to western Iowa and parts of Nebraska, South Dakota, you're going to be wetter than normal. That's based on Euro model data. Now we'll go to the same map based on GFS data, and it's totally different. Totally different. Dry for the western corn belt. You look at Nebraska, you look at South Dakota, you look at western Iowa, very much dry. So how is this going to pan out? I don't really know. I'll tell you this, the market, we're coming off of Memorial Day weekend. We are now officially, I would say, into primetime U.S. weather market season, and the markets appear very agnostic about the weather. They just don't care. We didn't open up last night like trading weather or anything like that, and maybe we're a little early for that, but I'll be very curious to see how these models resolve, because this looks very, very messy to me here this morning. Drought monitor, just to review, I know we did this on Friday, I think, but your problem areas, if there are problem areas, certainly Nebraska, certainly parts of South Dakota, a little bit of Minnesota, parts of Iowa, northern Illinois, get down into the southern plains, into Kansas. A lot of drought in the southwest part of the country, Texas and New Mexico and Arizona, places like that. So I don't know. We'll see. It's very early, but we're going to start trading these weather forecasts on a daily basis very, very soon.
The funds increased their net short position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, May 20th, large money managers were net sellers of 31,000 corn contracts. The net short of 95,000 contracts is the largest since October 2024. The funds were also net sellers of 24,000 soybean contracts and net buyers of 20,000 contracts of SRW wheat on the week.
So people will make the joke, the funds are net short 100,000 contracts of corn ahead of the growing season. What could possibly go wrong? I mean, look at the weather maps. I don't see the reason for concern right now. And the funds being short 100,000, whatever the number is in real time, that's not a hugely substantial position. This is more of a neutralish position that the funds are holding in the corn market. The funds are a group of large speculators. They put them all in one basket and say this is their net position. But there are some funds who are long. There are some funds who are short. It just so happens that their net position is one to the net short side. But I look at the weather maps and the drought monitor, and yeah, there's some problem areas, but I don't know that I see any reason for concern on a national scale. I also think that there are a lot of traders who believe that the corn acreage number will rise at the end of June when the next report is out, and that could be kind of a bearish type deal. So I think there's a lot of optimism regarding new crop production prospects, and not a ton of optimism regarding the markets right now.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about Friday's premium video?
Great episode of Macro Friday with Jim. $9 trillion of debt is rolling over. Talked a lot about interest rates. We had a ton of questions come in about interest rates in the bond market, which is very, very interesting. The bond market, or the debt market, is the biggest market on the planet. And I don't think most people understand or grasp the gravity of the bond market and exactly what it means. But Jim kind of broke it down and talked about what it could mean for commodity prices in particular, which is super interesting. I did a corn and soybean marketing update on Thursday last week, I believe. In these videos, I run through every cash sale that I've advised for corn and soybeans, old crop and new crop. They're broken down by crop year and percentage. There are no option strategies. There are nothing that's hard to follow. It's all super, super easy. I put them in a spreadsheet. I show you what I've advised and what my game plan is moving forward. Talked about some target orders that we've got working above the market. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This content that we post here for free on the podcast apps and on YouTube is a fraction of what we produce. We produce a ton of stuff, and the premium content is geared more toward the decision maker. So if you're the decision maker on your farm, whether it's marketing or transition planning or any of that stuff, crop insurance, the premium stuff applies to you. And this is actually the stuff that you need to see. We do a news show here for free, but the stuff that really gets into the nitty gritty of decision making is available via the premium subscription. You can sign up on your phone. Takes like 30 seconds. We do Apple Pay, Google Pay, Cash App, credit card. It's a piece of cake. All the info is super easily accessible on your phone. Everything is sent via email. There's no login instructions. You just click to play the videos. Absolute piece of cake. Give that deal a shot this morning, guys.
Friday's cattle on feed report could act as a catalyst for further gains in cattle prices. As of May 1st, cattle on feed totaled 11.4 million head, down 2% from a year ago and consistent with pre-report expectations. April placements were reported at 97% of last year's levels, also closely aligned with estimates. Notably, this was the lowest placement volume for April since 2020 when COVID-19 disrupted everything. Beef and cold storage also declined, reaching its lowest level for the month since 2014. Marketings in April were reported at 97% compared to last year. That was in line with expectations also. So, given the historically low placements and tight cold storage supplies, the market will likely view this report as bullish.
Bloomberg had this chart. This is beef cost, beef prices. I don't know if this is choice or select or whatever. Ground beef average price is what it is.
Mhm.
So you're setting record highs. Is this a good thing or bad thing for the U.S. Cattle producing? Let's say the smaller rancher or cattle feeder.
That ground beef prices are record high.
Yes.
In my opinion, I think it's a bad thing because I think consumers are eventually going to back off. I know a lot of people will argue that beef is king, and it is. There's no doubt about that. But when it comes down to the economy and how things are looking, I think we eventually reach a top and people back away from beef. And there is such thing as demand destruction, and beef prices getting so darn high, I think will eventually um, be the fallout of this market.
And the Packers say that they're not making any money, even with beef this high.
Yeah. And yes, their margins are squeezed, but you have got to be kidding me with that line because they have made bucket loads of money in the
Yeah.
past. And for once, they're just not making out like a bandit.
Yeah, I know that we posted a chart like this in one of our premium videos, and I think it was Jim who said something like, kind of alluded to this as not necessarily being a great thing for the consumer. And we had some responses, and people said, "Well, isn't it about time that the cattle producer makes more money?" And yeah, of course it is, but I don't know that this chart being at an all-time high means that the cattle producer is making more money necessarily.
Yeah, that's exactly correct. That doesn't correlate directly back to
No,
it.
this is what the Packers get. This isn't what you get necessarily.
Yes, exactly. And like I said, with beef prices getting so high, I think that is what eventually could cause this market to not tumble, but pull back at least.
Yeah, so you see some demand limitations in the future because of high prices potentially.
Oh, for certain. Yeah. I myself am worried about the economy. And when it comes down to it, a housewife or any of us, we only have so much money when it come at the end of the day. And golly, pork and chicken, that's a heck of a lot cheaper than beef right now.
Threw a couple charts in this morning. The bull markets in live cattle and also in feeder cattle remain very much intact. If you're to pay any attention to these regression channels that I've got on the charts, yeah, maybe you're getting a little lofty here and maybe you're due for a pullback, but there is not anything here that tells me that the bull market is over. This confirms to me that the bull market is very much intact, big picture, multi-year bull market.
John Deere is expanding into drone technology. The agricultural equipment maker has acquired Centera, a precision ag company specializing in drone based imaging and sensor technology. Centera's tools allow farmers to monitor crops and identify weeds using high resolution aerial imagery. The acquisition supports Deere's broader strategy to advance agricultural technology and increase automation in response to labor shortages. It also aligns with the company's ongoing efforts to enhance farming efficiency and productivity. Despite tariff concerns, John Deere stock recently hit an all time high and is up 22% year to date.
To go back to this drone thing and like the autonomous farming type thing, I've heard the argument made that that sort of push into technology is going to it's going to be a massive barrier to entry to anybody who would like to farm. Like if you're a younger person, you'd like to get into farming, this is going to make it damn near impossible because it's going to make it easier to be a big operation. You're going to need less people. The technology is going to do a lot more work, and it's going to be easier for the bigger farmers, and that's going to be an obstacle to entry for a lot of people. This is the way that the world's going. I mean, I don't know that you can stop this at any point, but I don't know that it's necessarily the best thing in the eyes of some people. If you guys have thoughts about that, let me know. You probably know more than me, of course. What did cattle prices do on Friday?
So cattle futures were mostly higher. Live cattle were 12 cents lower to 42 cents higher. Feeders saw gains ranging from 60 cents up to $1.50. Cash cattle trade last week was limited. However, it was higher once again. Up here in Nebraska, fat cattle were $1 to $2 higher compared to the prior week at 230 to 231. In the Western Corn Belt, cattle were also $1 to $2 higher at 230. And then down in the Southern Plains, cattle were mostly $2 higher at 222.
Stock market's up this morning, I think largely because of the tariff back and forth. The Dow's up 550 points in the futures, S&P futures up 89 points. Treasuries are up, US dollars up a little bit. Gold is down $63, a little bit of risk off there. No safe haven needed today, apparently. Everyone have a wonderful day. We'll be back on Wednesday.